Good morning, everyone. Good morning. Langat, how are you? I'm assuming I'm audible, right? Thank you for coming in early. Can see you logged in at 7:38. You're an early bird. Well, team, today I want us to look at JVs or joint ventures. And I know this is not a new term to you. If you look in the portal, I've populated the notes for clubs and societies, which are more or less like NGOs. Kindly mute yourself. Once you join in, kindly mute yourself. So I'm saying I've populated the notes for clubs and societies, and the approach is same as that of the non-profit making bodies. There's a lot of noise in the background. Oppo A57. You're interrupting my class. Mute yourself. Or I mute you permanently from my end. Very well. I'm saying if you look at the portal, I've populated the notes for clubs and societies, which are more or less not for profit making. So the approach is like the approach for not for profit making entities. And we had a look at schools and hospitals. So those are notes that you can go through on yourself. I don't think they'll be examined from my end, but you need to have that information just in case you land yourself in a club's job. Allow me to pick this. Are we back? Nicholas, can you hear me?
Yeah, there's an echo in your audio, but now it is clear.
No, but I said you excuse me, I pick a call. Or you didn't get. I'm now clear.
Yeah.
Yeah, we can go on. My screen is appearing. I'm sharing the screen.
Yes.
Yeah, I've said I've shared the notes for clubs and societies. Today I want us to look at the JVs. Joint ventures are not a new term to you. I know you covered it in the group's accounts. And in the financial accounting, we normally say that if a company is controlling 50% of the ordinary share capital, then they are joint ventures. And the purpose of joint ventures So I've decided to place control on my end because of the confusion that we are having. So I've muted all of you. So you have to raise your hand if you want to say anything in this class. So we go on. So we are doing the accounting for JVs. And I've said JVs are more or less partnerships, but the nature of the businesses coming together is for a common goal. We call them special purpose vehicles. So when a company gets, for example, a tender, let's say to construct a road, and they lack that muscle or the machinery, they can go ahead and seek help from a related company. They come together or subcontract the tender, do it together, and then they share the kill. So those are the JVs. So JVs are more or less partnerships, but these are form of partnerships where the companies will come together and they'll decide on the mode of doing business. I'm not sure what I'm sharing, so I want to reshare because I cannot see my screen. I believe now my screen is moving, right? So I've said a JV is where companies will come together as a special purpose vehicle to accomplish a given task. So the parties that are joined together, we call them co-ventures. These people are venturers. So one of them is a venturer. So we are going to have venture A, venture B. When they come together, they co-venture. So we are calling them co-venturers. And normally the liability is limited to the adventure that is concerned. In other words, it is dependent on the activity that they are coming together to achieve. Once that objective is achieved, they go ahead and break the joint venture. So it's as simple as that. So in characteristics, I've said that it is a temporary partnership. So they'll come together to achieve a given objective. After it has been completed, they part ways or they go back to the normal way of doing business. So the partnership is for a specific venture. I'll say they are special purpose vehicles. 3, the partnership is without use of a firm name. Yeah. So they'll just be talking of, like if my company is Mbogwa Limited and I'm partnering with Lagat, I'll be saying a joint venture with Lagat Limited. It's as simple as that. So it's a partnership that need not record or register a name. They'll just do a financial agreement on how the profits or the expenses will be shared amongst them. And then lastly, the purpose of the joint venture is to make profits. So they are profit-making entities. After they do that, they just share dependent on what is in the financial agreement. Now, the method is very simple of recording the transactions of a joint venture or a JV. When the JV transactions are met, or once you initialize the transaction, They can either be recorded through what we call the memorandum joint venture account, where all the transactions of the different venturers are recorded. And we'll be coming into a practical example. Or one of the co-venturers may be appointed to manage the joint venture. So if they appoint one of the co-ventures to go ahead and manage the books, this is the reference point. Thirdly, there could be separate books of account being maintained by each venturer. So you retain your books, I retain my books. After a given period of time, let's say at the end of every month or even quarterly, depending on the mode of operandi, we come together and commingle our books, or what we call composite accounting. So I'll come with my book, with my annex, you come with your annex, we composite and form now the final books of account. And lastly, you could retain separate set books of accounts for the joint venture. Separate to mean they are not in your books. So when I come into your company, you can tell me this is the JV that I have with Mbogwa Limited. Are you getting? So they are not appearing, or the transactions are not in any way interfering with your books of accounts. If it is a bank account, you've gone ahead and opened a bank account specifically for this JV. So if it is bank reconciliation, if it is cash book, name it, they'll be separate. So can go on. When a memorandum JV account is used, this is how we record the transactions. Of course, each venturer will open the account and indicate it. I had talked about a joint venture with Langat Limited. So they'll just indicate the names of the other co-venturers. If they are three, I can say joint venture with Langat and Nicholas Limited. If we are three. So you just need to, you don't even need to mention your name. You are a co-venturer in this joint venture. So we'll just be knowing that you and two others are involved in the joint venture. So these are the transactions or the books of accounts of the journal entries in the JV. When the venturer incurs any liability or they pay for expenses, we normally debit the joint venture account and credit the cash or the creditor's account, depending on the modes of transaction. Yeah, if it is on credit, our creditors will decrease. So we are going to credit, will increase. So we are going to credit. If we are paying by cash, of course, our cash account will decrease. That is why we are crediting the cash or the creditors. When the venturer makes sales, the books to be affected is either the cash or the debtors. Again, if we were doing cash transactions, our cash will increase, we debit. All our debtors will increase if our mode of operation is on credit, and we credit the JV. When the goods are supplied out of the venturer's own stock. So for example, let's say you are running a hardware and you are doing construction. Let's say you've taken a joint venture to do construction. Instead of going to buy cement from elsewhere, you just take part of your stock and supply in the joint venture. If that is the case, we debit the joint venture account, we credit your purchases day books. And if there is any commission that will be receivable, we debit joint venture, we credit commission. So we are saying that each venturer, as at the end of the period that they have agreed, could be monthly, could be weekly, could be quarterly, depending on the objective or depending on the activity that they are engaged in, they will send a summarized statement of all the transactions that they have had for the period. And if appropriate, they'll do a valuation of stock. For example, in the case where you are using your own stock. And then from there, each party will build a composite memorandum from the summaries that they have received from the other core ventures. And that is all about the books of JV. So you can look at a practical example. If you look at in your notes, now the profits after you commingle or after you prepare now the composite JV account, depending on the agreement, could be you had said that there is a ratio of sharing, let's say, half-half. So after we consolidate the books and there is profit, A will get 50%, B will get 50%. If let's say it was each getting a third, we are going to have A getting 33.3, we are going to get B getting 33.3, and we are going to get C getting 33.3. This depends on the financial agreement on how the profit will be shared. And in that case, now we'll debit our composite on the consolidated JV account and credit the P&L. So that's how the JV accounts are prepared. They are simple accounts. We have a practical example where Peter and Paul entered into a JV from 1st January 2016 to repair television sets and audio equipment. It was agreed that Peter would secure orders. So you can see the responsibilities of Peter in that JV is to collect or secure orders, collect items from the customers, now the electronics that they are repairing, and transport them to Paul, who would then carry out the repair work, deliver them back to the customers, and collect cash. You can see the mandate of Paul. Peter will secure the order, collect the items that are being repaired, and transport them to Paul. So we expect to see all the transactions that involves that on the Peter's JV. Then Paul will be in charge of doing the repair works. After they are complete, he will deliver back the electronic to the customer and then collect the cash. So each party was to charge his expenses against the joint venture, and profit and losses were to be shared in a ratio of Peter 2 out of 5, Paul 3 out of 5. The settlement is to be made quarterly. So you can see the financial agreement is to be settled quarterly. So you expect after the end of every 3 months, these people will be doing a composite JV to know how the profit will be shared or the profit that they made during the quarter and share it in the ratio of 2:3. And then in arriving at the P&L, work in progress was to be disregarded. In other words, if there are any electronics or devices that are under repair and they are incomplete by the end of the quarter, we are not going to consider that. And then we've been given the transactions that were held. So you have the transactions. I want you to go through them so that you work from the Excel. You can open this from your portal, the illustrations or the practicals. Giving you some time to open. Was on mute. Sorry for that. I've also enabled you people. To, you can unmute yourself so that we walk in this journey together. So I'm saying we need to record each core venture. We record the transactions independently. And then after the duration of, you say this is 2016, sorry. After the duration of 3 months or the quarter, they are going to consolidate the summary of transactions in a composite JV. And then the profits that will be available or losses, they'll be co-shared amongst the venturers. So we start, and the first entry is Peter assisted in financing Paul by sending him a check for 600. So you are going to debit Peter's JV and you are going to credit his bank account. Yeah. And we include, so this is how the entry will be placed in the JV for Paul. So in Paul's book, we are going to have bank. And because there are so many transactions for the bank, it's good to indicate what was it. So check to Peter. So the check to Peter was for 600 shillings. Yeah. So in the Peter's accounts, we are going to reflect Peter receiving this amount. Are we there? So after Peter receives the amount, they are going to indicate. Yes?
Paul, not Peter.
Yeah, this is, sorry. This is Paul, this is Peter. We are now good. Are we good?
Yes.
Yes.
So in the book, yeah, in the books of Peter, so this should be Paul. I'm mixing the names. Okay. So in the books of Peter, we are going to see the entry where a check was written to Paul. Once Paul received this check, they are going to record it in the year JV. So in the Paul's book, we'll be seeing on the credit side, we'll be seeing an entry of bank check from Peter. No, check from Paul. Kindly mute yourself.
From Peter.
From Peter. Where is the check coming from? Where is the check coming from?
From Peter.
From Peter.
Yes.
From Peter.
So this whole thing is confused. Let me go back to the question. Seems like we are not reading from the same page. So Peter assisted in financing Paul by sending him a check. So in Peter's book, check to, I had indicated that, then I changed.
Check to Peter.
So check to Peter. Are we good now?
No. Peter assisted in financing Paul. Paul is the one who received the check.
Can we agree that this is the JV with Paul? So this is Peter's books, isn't it? So this is check to Paul.
Yes.
You know, you guys, let's kindly read from the same page. See, I'm deleting. I again write, delete. So this is, maybe I can indicate here. Let us insert let me just say in Peter's books. So this is Peter's books. Peter has a JV with Paul. Is that understandable?
Okay.
Then here we have in Paul's books. Is that now Paul? Is that now okay?
Yeah. Check,
Now read the first transaction.
check to Paul.
A check is written to Paul, isn't it?
Yes.
So let us do this
Yes.
for the last time. So this is a check from Peter.
Yeah.
Yeah.
Are we now okay? Okay, I had indicated that, then I was scheduled to delete. So it's okay. So we are going to have in Peter's books, these are Peter's books, he'll indicate all the transactions that will affect the joint venture with Paul. So in Paul's book, he's going to indicate all the transactions that will affect the JV with Peter. So that is clear now. So we go to we go to the second transaction. Paul bought a stock of spares, components, and other materials for 700, of which 400 worth were still in stock at 31st March. Yeah. So we'll go in the Paul's books. We debit the spares, components, etc. of 700. Isn't it? So you go in Paul's books. So I think it's now clear, but in this case, we are going to now debit the JV. So you have bank, the spares, and the amount is 7, spares and components, and the worth 700.
Excuse me, sir.
Yes.
But from the question, we are told that in arriving at the profit and loss, working in progress was disregarded. So the 400 was for the other year. So are we using the 700 or the 300?
We'll still reflect the 400 as the closing stock. We are going to indicate our stock as closing stock. Yeah, we can even do it at this point. We don't need to wait until we end. So I've automatically deducted it, isn't it? Have I deducted it?
Yeah.
Yes, I've automatically deducted it. Yeah, but we would still have indicated it in the figures for closing stock. If you look at number 4, you said that all the valuation of the stock will be done as at the end of the period. So we go on. Then we have number 3, Peter placed an advertisement in the local papers at a cost of 100 and collected cash from customers amounting to 4,900. Yeah, so you are going to debit the advertising is an expense. You are going to credit the cash collected. It's a revenue, isn't it?
Yes.
So you have advertising. The amount for advertising is 100.
100.
Then we have the cash collected. And the cash collected, you told, is 49.
900.
4,900. Okay, we go on. Wages paid to part-time staff by Paul totaled to 1950, and by Peter 550. So we debit both JVs. So we debit wages. Wages due to Paul was?
To Peter.
What is the total wage?
550.
550. On this side?
So it is
1950.
1950.
Okay, we go on. The other transaction is an allowance was made to Peter 500 for vehicle running expenses and 200 to each party for use of the general services. So the general expense allowance is going to Peter. Yeah?
Yes.
So we are going to have vehicle running allowances in a vehicle running allowances of 500.
Excuse me. Excuse me.
Yes.
The wages for Paul, I think it is 1950, and for Peter it's 550.
Yes, Jackie, go on. You are breaking.
I'm saying
Yes.
the wages for Paul, I think it is 1950, and that. Hello.
I'm hearing you, Jackie. I'm hearing you. Exhaust your point. I'm hearing you. Jackie, you stop talking. Jackie, you've stopped talking. Are you still talking? Jackie, you've kept quiet.
Hello.
Yes, I can hear you. Can you hear me?
Yes, I'm saying that the wages paid to part-time staff by Paul, it is total to 1950, and that for Peter is 550, or I'm the one wrong.
So what is the title of our JV?
JV.
Now in the books of Peter, what are going to reflect? What are we going to reflect? You are saying 1950. Kindly try to understand that statement. To me, it is well, and that's why I'm waiting for your explanation why we should do otherwise. To me, the entry is correct. So if you want us to do otherwise, you are supposed to defend your answer.
Okay, I'll check on it.
Don't say you'll
Hello?
check on it. Don't say you'll check on it.
As in, I'm the one who is not understanding the question, because I'm seeing that the wages paid to part-time staff by Paul total to 1950. So I'm wondering why you are placing at Paul is 550 and at Peter it is 1950. You are hearing me?
I'm hearing you very well. In the books of Peter, we are doing the joint venture with Paul, isn't it? In the books of Paul, we are doing the joint venture with Peter. Is it now clear?
Oh, yeah.
Okay, so we have the last one. We've been told that an allowance was made to Peter of 500 for vehicle running expenses and 200 for each party for use of the general services. Yeah, and we have recorded that. So for general services, each party is affected. We are going to have on this side general expenses of 200 and general expenses of 200. Are we there? Do we have any other transaction? That's all. So there
No,
are 5
we don't have
transactions.
it.
So we are told prepare a joint venture account in the books of each venturer, together with the memorandum joint account for quarter 1 or for the quarter ended 31st March 2016. So we need to do now the commingled. So we'll do the composite. The memorandum joint account will now consolidate what is in the books of Paul and what is in the book of Peter.
Peter.
So our memorandum, this one will be easier. So memorandum, let me just do it down here. Let me give some space for closing the books. Still 4 cells. So I call this memorandum joint venture. Memorandum from the word memory. So for memory. So they'll want just to touch base and compare what they have in the independent venture accounts, JV accounts. The year is still 2016. Currency is in shillings. So you go on, give me those summaries. You just need to record now the summaries here. So I have the spares. I'll start with what is in the, I'll be looking at what is in the, so the first one is the expense. We have, the first one was spares. This was coming before, you are supposed to arrange them in that order because they were coming, they should be chronological. Then followed by advertising. Just picking the summaries. We are now consolidating the books, followed by
Wages.
But wages, now we are going to combine the 2 figures. So we are going to have, I can just indicate here, 550 plus 1950. That is giving us 25. This is 550. What else? On the debit side, we have the vehicle's allowance. Of 500. Then the last one is the general expenses. And they're also appearing on the both sides. So this will be 200 plus 200, giving us 400. That's all. Then
Yes.
of all the transactions, on the credit side, we had cash collected. And this cash is 49. Put these columns in monetary form. I'm waiting you to balance. Is it a profit or a loss? Oh, we had a closing stock on this side. Need to put the closing stock. So my books are balancing at 53. Is it a profit or a loss? Our expenses are totaling to 42. We have a profit, right?
Yes.
The figure of profit
1,100.
1,100. So this profit will be shared now amongst the venturers, right? You can just indicate down here the sharing. So sharing, or just write profit share. Then we have Paul. We are starting with Paul or Peter. Peter is getting. Let me go back and check. Peter is getting two out of 5. So what is 2 out of 5 of 1100?
440.
440. Then Paul is getting the remainder, which is 3 out of 5. 3 out of 5 of
660.
yes?
660. 650.
660.
Yes.
Yeah, 660 for our total. So you can close the books. So you can call this is the profit that we brought down. So this will be the carried down one. So that we close our books with the brought down one. So we'll just say profit brought down one is 1 and we are sharing it. So we just close our books. Do we need to go and reflect these entries in the independent JVs? Do we? We have the profit. Do we need to balance the books here? Yeah, we can, isn't it?
Yeah.
So again, this is 1950. So it's balancing on this end. It will balance at 49. We have a balance carried down one of, what's the difference? 1950 minus 49 minus 1950. What do we get?
2950.
2950. Yeah, so we can bring this down. So balance brought down on. So that will reflect now how the profit was shared to close the books. This is 2950. What was the profit that was due to Paul? What was the profit share?
660.
660.
It is?
660.
Are we going to indicate 660 or we are going to indicate the 440?
660 share to Paul.
No, they are sharing the profit, so we cannot indicate what is due to. Think with your feet. We are now writing a check.
440.
440, isn't it?
Yeah.
Yeah, it will be 440. So that we balance now our books. So our balancing figure will be our balance carried down. What is the balance? This will be 2510 for the books to
2510.
balance at 2950. So that is that. So we go and balance these other books. So we have 2850. And this is 1000. Yeah? Those are balancing figure. This side, isn't it?
Yeah.
So 2850. So our balance to be carried downward will be 1850. 1850. 1850. Yeah. What's the profit? We are balancing.
650.
Yeah, so we have the profit. $660. So the books are balancing at 2510. There is someone who is using two devices. Kindly mute one device. Can hear echo from my side. Are we good? Yeah, so our carry downward will be 2510, and we'll close the books. So you can see this figure is the figure here. So we have, it's like we are reconciling the balances, right? Are you seeing that? Yeah, this is the figure that is reflecting on either side. So you can just say, as at the close of the entire transaction, the two parties, they'll just exchange the check. We expect that in the year banks, we are going to have Paul doing a check to Paul of 2510. And we expect Peter to be doing a check to, we expect now Paul doing a check to Peter of 2510, and they'll have closed the books. Any question? We have the second illustration. You can look at the second illustration. I have the second illustration. Let me open the illustrations. JV illustrations. Are we good? I can stop sharing that. And I start sharing the illustration too. So you have illustration 2. We've been told that A, B, and C entered into a JV on the following arrangement. There is still someone who is using two devices. Why don't you mute one device? There is someone who is using two devices, either a phone or a laptop and something else. Kindly mute yourself. If you are using two devices, why don't you just mute yourself? So A, B, and C entered into a JV, and this is the arrangement. A would purchase blankets and B would purchase carpets to be sent to C for selling. Yeah. C would sell the goods at the best possible price and would send the remittances to A and B in accordance to their respective dues. Profits would be shared equally by all parties, C keeping the records for venture transaction. So you can see on this case, we have one venturer keeping the books. So we don't need to prepare the independent books. Yeah. So A purchased 500 blankets at 500 shillings each and spent shillings 6,000 for freight. B purchased 100 carpets at 3,500 each and spent 8,000 for freight etc. C sold all the blankets and carpets at 750,000 and his expenses amounted to 16,000. Show the joint venture account and co-venturers account in the books of C. So this is a bit easy because C is doing the composite joint venture. Yeah, we'll just do the memorandum joint venture. So I'll stop sharing that. I go back to the Excel. Can open a new sheet. So we go on. These are composite JV or a memorandum where C is now, the reason why C is the one keeping the books, the transactions are ending at C's end. So this will be the memorandum JV for ABC. What's the year? The year is 2015.
2016. Oh no.
The year, what's the year?
Yeah, 2016.
There is no year, or they have not indicated the year.
Not.
Okay. So you have our amounts. That's the amount being shillings. So we go on, and the transactions here are very simple. A is dealing in blankets, B is dealing in carpets. C is the merchandiser, or the work of C is to sell. And after selling, they consolidate the books. So shall we?
Yes.
So we have the co-venturer A. They are dealing, you are told that he purchased blankets, 200, and he purchased blankets. What's the total number of blankets?
500.
500. Yeah, 500
Yes.
blankets. What was the cost?
500.
500.
Yes.
Yes.
So
Each.
the total amount will be 250,000.
Yes.
Yes.
I'll put these columns in. And we are told that they incurred an expense of freight etc. Of what amount?
6,000.
6,000. So that's 60. We go on. Then we have B. B is dealing in carpets. How many carpets?
100.
100 carpets at the cost of
3,500.
3,500. So that will be 350,000.
Yeah.
What is the cost of transporting them?
8,000.
8,000.
8,000.
Yes.
Do you have any other transaction? Need to illustrations. Then we are told that C sold all the blankets and carpets at 750,000, and his expenses amounted to 16,000. Yeah, so that's an expense that need to be reflected in the memorandum joint venture. So we can just record the cash that was due or the bank. We just call it sales. And because it's like these people are trading overseas, that's why we are seeing freight just indicate sales. And then on this end, we have the expenses incurred by C. We just put it C. The year 16,000, right? Any other transaction? There's no other transaction. So you can balance the books. This is 630. So there is a profit. So we balance the books at times it could be losses, and they are going to share the liabilities. So the profit is, what is the profit? We are going to carry it down for sharing.
120.
120.
Yeah.
And we've been told that they are sharing this profit equally. You can just indicate here profit share. A will be 120 divided by 3, that is 40. B 40. C 40. So those are that's the book. So this is the brought downward so that we close the books. So profit. So that's all. So those are the books that C will prepare and share with the other co-venturers who are A and B. But we've also been we've been tasked to prepare the books of the other co-venturers, right? We've been asked to prepare the books of the other co-venturers. So we have the co-venturer A, or I do it on this side. Just do it on this side. Let me copy this. Who is hissing? You're supposed to mute yourself if you are. Co-venturer A. Just copy this. So here we'll just put the summaries that affect the individual books. Yeah. So we were debiting our JV. So we are going to credit the venturers accounts with the transactions that were affecting them. To complete the journal entry. So we are doing the contra. And the contra here for A is the blankets and the freight. I'll just come here and credit the co-venturers A account, but this will be, I'll talk of the JV, joint venture. Yeah. The other transaction that is affecting A is the profit. I'll just indicate here profit. If it was a loss, it could be appearing on the other side. So the profit is 40. And that's all. Do you have any other transaction that is affecting co-venturer A? Nothing. Then we go to co-venturer B. The transactions affecting co-venturer B, we as well credit them. But remember that this is affecting the JV, just in the normal ledger entries. The profit is still 40. That's all. Yeah. So we just close the books. And because these people are trading overseas, We assume that the mode of operation is in the bank account. So we expect that this is reflecting in the bank's accounts. We just, this is 296. So this is the amount that should be reflecting in the bank account as at the end of the period. On this end, we are going to have the totals, which is 398. So that's all. So like I said, the JV is just a special purpose vehicle to enable now the parties be able to transact. And after they transact, they just do the summary in the, they can either do it at the end, like in the first case, where we had Paul and Peter maintaining the independent books. After the end of the period, they do a composite JV or a memorandum joint venture. They marry the two. For this case, is a case where they've decided that one of the co-venturers will maintain the books, and then after that, he or she shares as at the end of the trading period. The good thing with the JV, I say they are special purpose vehicle. Once the activity is completed, they just part ways and you go back and continue doing what you are doing. It is most embraced in the big tenders where one party is feeling like the financial pressure is too much. So they can easily go to the other players in the industry, subcontract, do the work. After it is completed, everyone takes the profit and they go home. It's just like in the real estate where the joint ventures will come together, contribute their capital, and then the equity will be used to purchase the real estate because they are large capital investments. After they sell, of course, depending on the expenses or the mandate of each joint venturer, they'll go ahead and share the profit appropriately. Any question? Do we have any question? Now, I have a meeting at 11, and there's something that I needed to exhaust in our previous class. You remember? But I was affected by network for the real estate. I was somewhere around Harambee House, so I didn't know that because of the president going to the parliament, they are going to do what we call the geofencing. So they made sure that no one is communicating around parliament and the president's office. So that's how we were locked out of this class. Yeah. So of course the intelligence was thinking we are discussing the BBI. So that's why you are affected. So can we, yeah, that's what happens. When the president is, let's say, about to do a very immense conversation, they might lock out any other conversation around that area. And because I was somewhere in the CBD, I was locked out. No one could communicate until the president delivered his speech. Yeah, it was at KICC. I think so. But everyone was affected. Everyone who was in town was affected at that particular time. It's called geofencing. With this technology, anything is possible. Someone can decide to lock you out of network until they complete their business. Can we check? Can we check that? Can I share the exercise that I was sharing? So this is what will happen, guys, and I want us to listen keenly. There are people who until now have not given the assignments. It is not like I'm begging them. You know, I'll just put a 0. Yeah. These are your marks. So if you are not interested, I cannot force you. So I'll just put a 0 if you've not given your assignment or if you've not taken your CAT 1. I'll be posting a CAT 2, which I want to be a takeaway CAT. And it will be due next week. I'll be posting it later in the day for the specialized accounting. Are we in agreement? That CAT will carry assignment 2 and CAT 2. Hapo ni sawa sawa?
Yes.
So those people who are not interested in marks, I'll just put a 0. Don't come to me saying that you don't have marks. You see,
Excuse me.
Yes.
I tried to submit my assignment yesterday, but my network was poor.
You see, you cannot just submit. You need to request. How will you submit and the time is over? I say those are private conversations that you are supposed to make with me, isn't it? You are not even supposed to bring it to the class. That's a private arrangement. You are supposed to talk to me so that I give you the rights to submit. Tunaelewana?
Yeah.
So you'll talk to me later in the day.
Okay.
Yeah, talk to me around 3 because I'll be going into a long meeting. It might take some time from 11. Do you have any other questions?
So we won't have
What about the real estate class?
That is what I'm starting right now. I've said there's something I wanted to share last week and I want us to cover it now. It will take 15 or 20 minutes. Is it okay?
It's okay.
Okay.
Yeah.
Yeah, it's well.
So I'm trying to open it. I had shared it in the portal, the exercise. I'm trying to trace it in my folders. Real estate finance. Well, I've gotten it. And because I don't want a failure in my class, that's why I'm sharing this vital information. I don't want to prepare failures. Now, this is the question that I was indicating, and I was saying that basically, the questions of real estate will be the modeling or the framing of the questions will be more or less the same. So you just need to understand how you are supposed to unpack this information from the examiner's perspective into your perspective. We've been given a case here of Amina, and we've been told that Amina invested in Grande apartment, and the following data was extracted from her books from the year 2019. She intends to sell the apartment at 1.5 billion to any willing buyer. So it's a willing buyer, willing seller transaction. So we've been given the data there. We just need to understand what is supposed to be where. And we had started, I remember. So you'll go marking. You can use a pencil during the exam. Because you'll be doing online exam, I think you'll be doing what we are doing here. So we have the vacancy rates. I said vacancy rates are always given as a percentage of the gross rental income, annual rental income. If the examiner is talking of monthly rental income, multiply by 12. Because vacancy rate is given as gross rental, annual rental income. Gary, gross annual rental income. So we are going to take our gross expected rental income is 639. So we are talking of the expected because there is a vacancy rate. So we are providing for any vacancies. So we are going to get 4.85% of this. Then you go identifying these expenses to know which are indirect, which are direct. For example, you have the leasing commissions. So the marketers or the people who are promoting the real estate or the property, of course, they are paid on commission. So these are direct expense. That's why we indicated D. Then we have new roof. What is in red means need not to be here. A new roof is a capital expenditure. So we said capital expenditures will not be used in the calculation of the NOI, of the net operating income. Then we have capital gains tax. What will be the argument? We said all the property taxes are direct. So these are direct expense. We go on. Mortgage interest. Mortgage interest. Mortgage interest is an indirect expense. So we can color it red. It needs not be
Indirect.
It's an indirect. We go on vending receipts. This is an income. So you're going to add it back. After you subtract your vacancy rates, to get the effective gross income, you are supposed to add all the other incomes. So vending receipts. Then we have paving a driveway, capital expenditure. So not included. We have a tuck shop. You've seen these estates where the owner retains one room as a shop to be selling you breads and milk. So these are revenue. So you'll add it back to get effective gross income. Then property depreciation. Property depreciation. Property depreciation is an indirect expense, isn't it? Yeah, we said all the wear and tear will not be included. So it ought not to be here. It's an indirect expense. Let me just put IE. Is wear and tear. We go on. Property manager. These are direct expense. Repair costs. Repair costs is an indirect expense, right? It's also of wear and nature or entire nature. Utilities, all the utilities that are not traceable to the tenants are direct expense of the property. Then we have maintenance. We say general maintenance is a direct expense. Mileage allowance. Mileage allowance. There is a difference between using your car and using your car where you are being paid. You see, my employer can tell me, instead of us providing a company car, you'll be using your car to carry on the businesses of the property, but you are going to be reinstating or reimbursing the mileage allowance. So it is a direct expense. Are you getting the argument?
Yes.
Yeah, so if it was a personal car and there is no any allowance that the personal car was commanding, we wouldn't have taken it. It would have been an indirect expense. Then we have grande lawnmower. This is grande property. Yeah, so the lawnmower belongs to the property, so these are direct. Then annual debt service, we know that that is an item that will be used in calculation of the ratios, one of the ratios. So we don't have a problem with that. Then we have gross expected rental income. We have advertising. Advertising is direct. You have a point of interjection? No. We have janitorial services. These are cleaning services. Then you have an item here that we are calling loan origination fee. You'll find some examiners calling it loan points. Loan points. When you go to process a mortgage, a loan, there is something that you pay called appraisal fee. When you are processing a mortgage, you pay what we call loan origination fee, or they are called loan points. Points they are indirect expenses. People who are still carrying business in my class. So loan origination fee and loan points, they affect the mortgage. So they are not supposed to be part of the property. Don't you mute yourself if you must talk. Yeah, so that's how you are supposed to unpack the information as given by the examiner. Then from there, you've been asked to compute the following ratios. So I want this to be your cut 2. So you'll kindly go to the, I'll set it of course as a cut, but you can start doing it so that you'll be able to submit. Any question? Any question? I really have to leave. I have a meeting out of town at 11. So enjoy your day. If you have any personal, if there is any personal questions, just route them through my mobile phone. Call me anytime, but not after 8 p.m. Just call me during the day.
Thank you.
Ukipigia mtu saa 2:30 ya usiku, call during the day, at least between 7 to 5. Enjoy your day.